Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Wednesday, October 10th, 2012. All right, let's take a look at the S&Ps. On the T1 top wave right here, made up of two waves. The shorter one is making its way towards zero. And as soon as that crosses, we should see a nice healthy dump, just like when it crossed right up here. It actually came back a little bit and then zigzagged its way back up. When T1 is completely above zero, it just took off. So if you're playing this for the long term, you have to have stops in place, but this zigzagged up from approximately 1344 all the way up till what's going on right now. So 1436, so about 90 points. But T1 is showing signs of weakness. If you recall, this double top, I thought this was going to roll over, and I barely hung on to the position on October 5th. But I saw it starting to turn around, and I took my finger off the trigger and just let it happen. And it looks like we are rolling over, and it could cascade all the way down to this support line, this bottom trend line right here, which is in sync with the 89 exponential period moving average. I also wanted to show you this line here, this inside track. Inside the two main trend lines here, we have another trend line that's about halfway. It's about equidistant between the two, and it bounced. It took a bounce on 9/12, and then again at the end of the month, at the end of September, 9/26, 27, 28, and into October. Bounced up, tried to make it to the original trend line, failed, and now it took out this inside trend line. So there's no reason not to believe that the T1 is going to go below zero. Now if we look over at, we can draw this trend line here so you can see a little bit more easily on the 21 minute. Right there, and that's how that happened. So we started here at the end of September, moved through it, came back and bounced off of it, bounced way above it, which is on the daily is this spike reversal candle right in here. We came down, the 8 and the 21 crossed, and they both crossed the 50. And then they crossed the trend line today, which is, well, actually, this is kind of late in the day. This is like 2:25 a.m. on Central Time. I'm a little late getting started. But it came down through the trend line with a vengeance, and then never made it back up through the trend line, which also happened to be the 377 exponential moving average on the 21 cash. So my target remains down to this trend line, which goes back. Actually, this trend line only goes back to June. It was the inside trend line that we're using as a ceiling, but this trend line goes back to June, and comes right out at. Let me see here. Comes right out at about 1400, and I don't see any interference. It may bounce a little bit off the 55 at 1418, but we should not have any problem making it down to 1400, and that may happen very quickly. So let's bring over this comparative chart here. Now this is the Aussie yen that I've been talking about for a while. This Aussie yen line, if you can see this line right in here, this line right here, it had a low of 79.35. If you go along all the way across here, it actually matched the low from the end of June. So the other night, I said it came down and tried to match these lows and spent 5 days there, and then went down, came back up, and it's kind of flirting with that same area. So again, as a review, this was the Bernanke candle right here. This was the ECB candle with Mario Draghi. This was the Japanese candle, and the next day was the Chinese candle. So the Japanese and the Chinese candle did not move the market, but the Fed did and the ECB did. And we have now taken that entire thing out. So now let's take a look again at the candles that are the same on the ES. This is the Bernanke candle, this is the ECB candle, and that means that if it took it out on the Aussie yen, that I'm fairly sure it's going to take it out on this. So it's this line of tops that started back in the beginning of August that continuously for 2 weeks or 3 weeks went straight across and then took off. The only thing, and at the time, we can look at this chart right here. At the time, it looked like T1 was going to roll over, and it would have had it not been for the next day, which was that. And then 3 days later was right here. So it did a reversal on the hope and the prayer that if they eased money that everyone would get back into the stock market. It may be political, who knows, but notwithstanding, it still moved the market. And now, since the Aussie yen has taken out all that advantage, it is moving a little bit in the middle of the night here from Tuesday to Wednesday. Then there's no reason why, since the Aussie yen is a lead indicator, that this won't come down and match the bottom of this candle, which was the line of tops and bottoms here for 3 weeks. That puts us at 1402, 1403. So I'm round figure 1400. All right, moving on. As far as intraday trades go, this is a nice candle to the downside. T3 moves down at 941, and you have 1446 until the first wave sends you up on T1 at 1437. You ride that out during the day and then brings you back down at 1438 right into the close. That's if you were day trading. All right, I'm going to run through the stocks really quickly. Goldman Sachs, it looked like it's kind of like it's sideways to up, double top. Fundamentally, I don't like what's going on with the banking system, so I don't particularly care for this as a long. The 21 is showing indications that it might be a short. This is T3 is starting to roll over, T2 is already rolled over, and T1 is rolled over. So actually, wait a minute, now that I look at this, T4 just had 4 down candles. So I'm looking at Goldman Sachs as a sell right in here. All right, Amazon, when it reached I had a target of, I think, 268. It hit 264, and it looked like T1 on the 21-minute cash was rolling over. So I still like Amazon to the downside. All the waves on the 21-minute cash are down. T1 on the daily is one short little 0.03 away from being a complete sell. A short-term sell anyway. That could bring us down to at least another 4 points, and probably, let's see here, where this line of tops is right here, it's about 234. One more thing about Amazon, they're coming out with earnings a week from Monday. The day after expiration is day after October expirations. So the Monday after October expirations. If they're not absolutely at the peak of what they're doing, we could see Amazon drop kind of like the way I think it dropped one time. Maybe it's not on here. I thought I remembered Amazon dropping down to 200 one time on bad earnings. Well, here it went up from 189 to 234. Anyway, Amazon could drop out of bed. It could drop down. It could drop down to 240. It could drop down to the 233 exponential moving average. And this is just the daily is just a guide. The 21-minute is really what you want to play. So you would have played this on the upside on October 3rd at about 252 and sold at 258 and buy the appropriate calls or puts, whichever way you're going on this. Okay, Baidu, if you recall, I still liked it even though it had spiked up from 13 to 16, almost 17 on, let me see, this is Monday, Tuesday, Monday, this is Friday. And I said I still like it on the downside because T5 was buried below zero as well as T4 and T3 on the daily. And this was just whatever buying was in there. But look what happened today, 7.8 points. So really, really nice. It took out the lows from 912, and it looks like it wants to head down to 99 before there's any serious bounce. So that was a really, really nice play. Also, if you were just playing very, very short term, it gave a sell signal on T1 at 1 o'clock in the afternoon on Monday, right here, when T1 goes below zero at 113. And the low today was 106, and then it took a little bounce. So if you do get a little bounce on Baidu, I still like it to the downside. If you're lucky enough to catch a bounce to the upside, short it. Okay, I thought on Netflix that the 89 period exponential moving average was going to hold it, like it did in this cluster of 10 days of trading back in July before it dropped down. But apparently it wanted to seek the next level, so it did go up to 74.81, and this is the 144 exponential moving average. So it did move up there. There were signs on the 21-minute cash that it wanted to do that on the right back in here on T3. However, these have all caved in since then. All the waves are starting to cave on the short term, and the target that I had was 66. It actually went up to 74, and it went through the 66 and now 65.28. So we'll see what happens with that. The wave 1 is rolling over into wave 2, into 3, and this may come all the way down to 61 in a blink of an eye. I still have a long-term target. My long, I guess I don't have it on this. My long-term target is somewhere, let me see, is somewhere around 48, I believe. Let's see what it is. Okay, my long-term target, not so long, say like 5 to 6 weeks, is 43 on Netflix. That's it's a 1272 extension from the high to the low here. 43.40. Okay, for all you Apple lovers, this 21-minute period goes all the way right in the center of this chart. There's this peak of 703, and which is the peak up here. Okay, now the first indication that this was getting weak was when T1 rode below zero, the stock was selling for 667. Excuse me. That was on the 21-minute. It had already come down from 704. Now, if you were playing T4 on the 21-minute cash, then you would have been in back at 701. All right? And then you play the shorter T1 wave to move in and out while this is on a downtrend. So this is on a downtrend, and especially, again, it was recapitulated right at 661, and it's been down when I recommended the short on this, and 661 down to 623, and I actually had, that we talked about on the last update, I had 633 as a target, and it hit that today. It actually went 10 points below it. So this is the idea, that once it hits the target, you get out of 3/4 of your position, and then you keep tight stops and let the rest ride. So if you had like a 2-point stop and a 2-point trailing stop in here, and it hit 23, you would have been out at 20. Let me see. It would have been out about 24, 25, or even 26. So the last quarter you would have gotten 26 on. As it was, it came back up here. Now it may bounce. T1 is slightly above zero right here. It may bounce. If you can get a bounce back up to 650, like right where all these lines are coming together here. If you're lucky enough to get a bounce back, I doubt it's going to happen, but if you're lucky enough to get a bounce back up to 650, and anything on Apple is possible, then that's re-shortable. Take another short or buy puts. Okay, MasterCard took some off the top today, 7 points. On T1, this is the first time on 21-minute cash that happened on Monday. Slightly on Friday just before the market closed, or Monday just after it opened, when it was back up at 473. T1 went below zero and confirmed by T2 and then T3. So this is just like rolling into the 377. So that's the immediate target is 377 at 457. Okay, so gold, GLD. My target for gold, I said if you were lucky enough to get it at 170.38, it hit that today. It looks like it's T1 is starting to roll over, and all of T1, 2, 3, and 4 on the 20-minute cash. This hit the 377. I'm going to wait and see what happens on this. I'm not sure whether this is going to bounce off, even though I like gold long term, I'm not sure whether this is going to bounce up here and rocket into 174, or whether it's going to take out the 377 and move lower. If it takes it out, then it'll probably move down another 4 or 5 points. I have to wait and see whether T5 goes below 0 or not, because this is, the line in the sand is this blue, dark blue line that's been long since 156 on August 16th. And so we have to watch that. This is not shortable until T5 goes below 0. Otherwise, this could turn back around. If the cash goes sideways and this moves above 0, then it's a long again, and 377 became resistance. All right, and Google T1 started going down right about here at 766, and it went, remember I said it did not look bad to the upside, but in a market that's going down, all asset classes and all equities are going down, and I mentioned 744 as a possible target. It hit that today, or rather on Tuesday. So it's the same. This is kind of like the same setup with gold. It's been up above the 377 for a long time. It's been above the 21 period exponential moving average on the daily for a long time. So we'll have to see what happens to the market. If the market is clearly down, then T5 is going to go below 0. And as soon as this goes below this purple line, you wait for it to go back up, and then you short it. So the next, if it fails 741, comes down, you can reshort this. You can short this at 741. After it takes it out and comes back up, kisses it goodbye and goes down. You can look for Google to hit the 55 period exponential moving average on the daily of 697. That's all I have for tonight. Sorry about the late video. Good luck trading. See you at the next update.